Good morning, everyone, and welcome to today's webinar, Texas Franchise Tax Closing Your Business. I would like to now introduce our presenter for today's webinar, Betsy Poe with Tax Policy. Just a quick background on Betsy. She has over 19 years experience with the Comptroller's Office. She also has experience with franchise tax as a speaker and a trainer.
Hello, everyone, and thank you for joining me today. I know you're busy, so I'll keep this presentation to an hour or less. If you need to leave the presentation before we're finished, don't worry. We are recording the webinar and plan to post it on our website on our Tax Training Resources webpage. In the meantime, check out our podcasts on our Tax Training Resources page on our website at comptroller.texas.gov. Throughout the year, we are asked, why am I getting notices from your office for filing taxes? I closed my business last year. Let's clear up the confusion about closing your business. In most cases, the answer often is, you may have closed your business doors, but you formed a legal entity and you did not end its formation as a legal entity. Entities formed with the Texas Secretary of State, or SOS, or another state's Secretary of State are legal entities separate from their owners. To close a legal entity requires you reversing the process you used in forming it. And that is what this webinar is about. See our Franchise Tax Rule 3.581, Margin, Taxable and Non-Taxable Entities, for a list of legally formed entities that must complete this process to close their Texas franchise tax responsibility. In this webinar, we'll cover the steps required to legally close your business, filing requirements for reports and tax payments due, filing requirements to legally close your business, and resources for where to get help. But first, I have 3 true or false questions for you to think about. Compare the answer you have in mind now with the answer you have at the end of the presentation. Okay, here we go. Are you ready? Question number 1, true or false? You formed a limited liability company, an LLC, in May of this year. But because your financing fell through, you decided to close it in October. You do not have to file with the Secretary of State to close your LLC. Do you have your answer? Let's move on to question number 2. True or false? The Texas Comptroller of Public Accounts requires a fee to issue a Certificate of Account Status, or COAS, to terminate. Paying a fee for a COAS. So, do you think this is true or false? And finally, our last question, question number 3, true or false? There is no filing deadline for either the Comptroller of Public Accounts or Secretary of State when an entity ends its Texas operations. So, do you think this is true or false? Do you have your answers in mind? Let's move on and see if we can confirm your answers to these true or false questions. General principles. Franchise tax is not an income tax. It is instead a privilege tax, meaning the taxpayer files reports based on the previous year's accounting data to have the right to operate a business in Texas during the current year under Texas Tax Code Section 171.151, titled Privilege Period Covered by Tax. Any entity providing protection for its owner's assets must file reports unless the entity qualifies as an exempt entity under Rule 3.583, Margin Exemptions. All taxable entities must file reports, even those taxable entities that owe no tax. Some non-taxable entities are new veteran-owned businesses and passive entities. Annual reports are due on May 15th of each year. starting the year after the entity became subject to franchise tax. An entity is subject to franchise tax if it is formed in Texas or formed out of state and is doing business in Texas. To end your business entity's Texas tax reporting responsibility, you must do what we call the Texas two-step. Your first step is to file any reports and payments due with our office. The second step requires you to legally close your business with the Secretary of State. But more about that later. Right now, let's talk about satisfying the Comptroller of Public Accounts filing requirements. To do this, you must cancel all permits and licenses issued to your business for any tax type your business is responsible for filing with our office. And this must happen before our office can issue you a certificate of account status to terminate your business. We'll discuss the certificate later in this presentation. But now, examples of comptroller issued permits and licenses include the Ag Timber Registration Number card. If your business has one, you must cancel it. Or a sales and use tax permit, which is our most commonly issued permit. If your business has one of these, you must cancel the permit. You can check the status of your permit through our sales taxpayer search located on our webpage at comptroller.texas.gov. Or if you have a fuels tax license, any fuels tax license, even a dyed diesel end user permit, you must cancel it. Or an IFTA license. For those of you who don't know, IFTA stands for International Fuel Tax Agreement and is required for vehicles hauling people or freight between states. If your business holds an IFTA license, you must cancel it. Our last example is of an oil and gas well servicing tax license. If your business holds this license, you must also cancel it. I'm sure you're getting the message by now about canceling any license or permit your business holds. So now, what else must you do? Well, you must also file all tax reports and payments your business owes our office. These must be filed through your business closing date for each and every state tax type your business reports to our office. For example, if you have a sales tax permit and you cancel it on November 30th this year, you must report and pay any sales tax collected from your customers through your permit's end date. Part of ending your sales tax responsibility is to file your sales tax report and tax payment. You must do this before we can issue you the certificate of account status to terminate. Now that you've canceled all your permits and licenses and taken care of all reporting and tax payment responsibilities, let's get down to the reason for this webinar: how to legally close your business and its franchise tax responsibilities. Let's first address the filing requirements for closing franchise tax. These filing requirements are similar for a single business entity, such as a limited liability company, and a combined group when all members of the combined group end their Texas presence or existence. This means filing as required by law any annual franchise tax reports, any public or ownership information reports, a final franchise tax report, any payments due, and Form 05-359 to request your certificate of account status to terminate. You can find information about filing report forms and payments in Rule 3.584, margin, reports and payments in subsection C and I, and the form instructions. You can also use our downloadable forms, which have pop-up instruction boxes for each line item entry. When you are closing a single business entity or an entire combined group, you can file any form format to report the previous year's accounting period data for which the business or group qualifies. This means you can file a no tax due report if your business is at or below the total revenue threshold for the report year you are filing. For 2018 and 2019, the threshold is $1,130,000. The EZ computation, if it had total revenue of $20 million or less, or the long form annual franchise tax report when you are reporting any amount of total revenue, taking a margin deduction, taking allowable deductions such as solar or wind energy or business relocation costs, or claiming any available credits such as the historic structures tax credit and the qualified research and development activities credit. Phew, that's a lot of information to remember. I'm so glad you can find it all on our website. Don't forget that you must use the accounting year data from 2017 when filing your 2018 annual franchise tax report for your business. Now, let's talk about the information reports. Each entity must file an information report unless it is a member of a combined group and has no nexus. Your entity's formation type determines which form you file. To be current and accurate, these forms require you to enter your data as of the date you file the form. We have two information reports. The first information report form is the Public Information Report, or PIR, which you must file if your business is a corporation, limited liability company, or LLC, limited partnership, often referred to as an LP, a professional association called a PA, or a financial institution. The second information report form is the Ownership Information Report, or OIR, which you must file if you formed your business as anything else. If you are filing as a combined group, the reporting entity of the group has the duty of filing the group's franchise tax reports with any additional report schedules due, creating supporting documentation to prepare the franchise tax report, and maintaining all records required for audit purposes. One of the additional filing requirements the reporting entity has is to file the affiliate schedule. This form lists all the members in the group and reports each member's required data. And it lists every member in the group, even if the member has no nexus in Texas or is disregarded for federal tax reporting. The reporting entity files the common owner report form with the group's combined report, but if and only if any member of the group has preserved a business loss carry forward and can claim the temporary credit. Make a note. When the group can claim this credit, you must file this form even if the group is not claiming the temporary credit for a particular report year. The group's supporting documents include the work papers that show the internal accounting data for each member in the group and a combination and elimination schedule. In order to close your business, you must also file a final franchise tax report. Be aware, you must file your final report within 60 days of the accounting year end date you enter as the closing date on your final report. As long as your business is active during the current year, you can file your reports online. This includes the annual and final franchise tax reports, information reports, any payments due, and your request for the certificate of account status. Or you can file paper report forms using our downloadable forms or third-party software printable forms. But remember, if you are filing a no tax due report for either the annual or final report, you must file it online. I just want to emphasize the accounting period you enter on your business's final franchise tax report must show its accounting year begin date as the day after the accounting period end date reported on its annual report, and the accounting year end date must be within 60 days of the date it files its termination documents with the Texas Secretary of State, if formed in Texas, or ends its business operations in Texas if formed out of state. For example, let's say you are using a calendar year for your accounting period. Your 2018 annual report accounting period then is January 1, 2017 through December 31, 2017. Your 2018 final report's accounting period start date is January 1, 2018 and goes through December 31, 2018. If you are terminating on or before December 31, 2018. You need to decide if you need to file the annual report or final report. Then you calculate franchise tax due using the revenue data you reported to the Internal Revenue Service, or IRS, on your business's federal tax report forms, or you must report information from specific line entries of the federal return and your business's franchise tax report to determine total revenue. Then deduct your total revenue exclusions. Once you determine your total revenue, you then choose which franchise tax format to use, either the no tax due report, the easy computation, or the long form, and then using the qualifying computation method allowed by the easy computation form, or whichever one of the 4 margin computation methods allowed by the long form. You must use whichever one that gives you the smallest amount of tax due. Then, deductions and available credits you can only take on the long form report and your tax rate. See our franchise tax and franchise tax credits web pages and tax laws and rules that discuss total revenue, cost of goods sold, compensation, allowable deductions, and credits. The computation methods available are the easy computation method, which is total revenue times apportionment factor times easy computation tax rate, or whichever one of the 4 margin computation methods that gives you the smallest amount of tax due. The margin computation methods are total revenue times 70% times apportionment factor times the tax rate, or total revenue minus cost of goods sold deduction times apportionment factor times tax rate, or total revenue minus the compensation deduction times the apportionment factor times the tax rate. And finally, total revenue minus $1 million times the apportionment factor times the tax rate. The apportionment factor is a math formula, which is Texas gross receipts divided by gross receipts everywhere. So, what are gross receipts? Generally, the gross receipts everywhere amount for your business is the same as its total revenue, but there are exceptions. Please see the form instructions for exceptions that may apply to your business. If you need to know what these terms mean, Texas receipts means gross receipts from your business done in this state. You can find the definition of Texas receipts in Texas Tax Code Section 171.103 and Rule 3.591. Receipts everywhere means gross receipts from your entire business, which you can find in Texas Tax Code Section 171.105. So, what are the tax rates? The easy computation tax rate is 0.331%. The long form tax rates are either 0.375% for qualifying retailers or wholesalers, or 0.75% for businesses other than qualifying retailers or wholesalers. You have several choices for filing your tax reports and making payments, which includes filing online using our web file systems through which you can also make payments. WebFile lets you make web electronic funds transfers, Web EFT, sometimes called an electronic check or e-check, or credit card payments. The credit cards you can use are American Express, Discover, MasterCard, Visa, or approved third-party software and make payments through WebFile, or TextNet, the state's wire transfer system. Filing in person at a local field office to file forms with a check, cash, or money order, and by mailing forms with a check or money order payment. Remember earlier, I mentioned the filing requirements when all members in a combined group close? But what about the filing requirements for a combined group member when all the group's members do not end their Texas existence? Then the member or members that are closing file Form 05-359 to request a certificate of account status to terminate and designate the reporting entity that will file the closing members' required tax data. You need to know about a special situation. Like an eclipse, this is when you close your business entity in the same year you opened or formed it. When you close a business in the same year you form it, your business entity still must satisfy its filing requirements with our office. This means you must file premature reports, any payment due, and Form 05-359 to request the certificate of account status to terminate. If you were wondering what premature reports look like, here is an example. Filing a premature report just means you're filing the report early, which we expect you to file on May 15th of the year after you formed your business. And you must file it early within 60 days of closing your business. And you must write the word premature across the top of the report form. Your premature report's accounting data is based on when its federal tax accounting year end date occurs. If its federal tax accounting year end date occurs before the closing date or after the closing date, then when the business entity closes before its federal tax accounting year end date occurs, the premature report you file includes the business entity's first annual franchise tax report, its information report, any tax due, and Form 05-359 to request the certificate of account status to terminate. When the business entity closes after its federal tax accounting year-end date occurs, the premature reports you file include the business entity's first annual franchise tax report, its information report, a final franchise tax report, any tax due, and Form 05-359 to request its certificate of account status to terminate. You file Form 05-359, your request for the certificate of account status to terminate, to request Form 05-305, which is your certificate of account status to terminate. You can file online through WebFile, in a field office, or by mail. If you need help, please contact us by phone at 800-252-1381, and our Taxpayer Services Department can answer questions about completing any franchise tax form or about how to close your business. You can call 1-800-442-3453, and our Electronic Reporting and Payments Department can answer questions about filing reports and payments online. You can also file in person at one of our enforcement field offices or email us at tax.help@cpa.texas.gov. Now, it's time to talk about step 2 of the Texas two-step process for legally closing your business. Step 2 is for satisfying the Texas Secretary of State or SOS filing requirements. To do this, you must satisfy all SOS filing requirements, and the Secretary of State must receive all documents by the close of business on or before the expiration date on the Certificate of Account Status, the Form 05-305 that our office sends you after you completed Step 1. You must also file with the Secretary of State their termination forms and filing fees. Okay, 2 things to remember. For this year, the Secretary of State filing deadline is Monday, December 31, 2018, before 5 p.m. Central Time. Oh, and by the way, the Comptroller's office will be closed on December 31. So if you need to get a certificate of account status, request it on or before Friday, December 28th. What happens by missing your Secretary of State filing deadline? Well, you will have to repeat the whole Texas two-step process all over again in the new year, including filing a 2019 annual franchise tax report, a 2019 information report, a 2019 final franchise tax report, and Form 05-359 again to request a new certificate of account status to terminate. So remember, the Secretary of State filing deadline is Monday, December 31, 2018. While you can file with the Secretary of State by mail, in person, or online, you need to contact the Secretary of State for information about their filing options and fees. To contact the Secretary of State, please call the Secretary of State Public Information and Response Team at 512-463-5555 or send an email. Do you remember our 3 true or false questions we ask at the beginning of our webinar? Let's see if your answers are the same now. So question 1, true or false? You formed a limited liability company, LLC, in May of this year. But because your financing fell through, you decide to close it in October. You do not have to file with the Secretary of State to close your LLC. That answer is false. Any entity registered with the Secretary of State, like an LLC, must file with the Secretary of State a Comptroller-issued Certificate of Account Status for termination, its Secretary of State termination documents, and the Secretary of State filing fees. Ready for our next question? True or false? The Comptroller of Public Accounts requires no fee to issue a certificate of account status to terminate. This is a true statement. The Comptroller charges no fees for issuing a certificate of account status to terminate or any other certificate of account status or certificate. There is no filing deadline for either the Comptroller of Public Accounts or Secretary of State when an entity ends its Texas operations. The answer is false. The filing deadline for the Comptroller of Public Accounts is no later than 60 days after you close your business, and the Secretary of State filing deadline is by close of business the last business day of the year. And remember, for 2018, this will be Monday, December 31, 2018. So how did you do on the true or false questions? Did you get them right, or do you need some help? Well, remember, we are here to help. You can call us at 1-800-252-1381 or come visit us at a local field office. And our phone lines and field offices are open 8 to 5, Monday through Friday, or you can write us anytime at tax.help@cpa.texas.gov.
Thank you, Betsy, and thank you to our attendees. Throughout the presentation, I see some of y'all have already sent in questions. Let's go ahead and review some of the common ones we received. All right, Betsy, the first one. What does a business file if it is terminating or no longer has nexus in Texas?
Good question, Melissa. A business or legal entity that ends its existence or no longer has nexus and that is not part of a combined group must file its annual franchise tax report for the previous accounting period, unless it is already filed, along with the appropriate public or ownership information report for the entity type due with the annual franchise tax report, and a final franchise tax report for Texas formed entities. Report the current year's accounting period data beginning the day after the end date shown on its annual franchise tax report and ending on the day the entity terminates with the Texas Secretary of State. For out-of-state formed entities, report accounting period data beginning the day after the end date on its last annual franchise tax report and ending on the day the entity ceases or ceased doing business in Texas. This final report is due within 60 days of when the entity terminates its formation with the Texas Secretary of State, or if it was formed in Texas, or ceases to do business in Texas if it was formed out of state, along with any tax, penalty, or interest due in Form 05-359 to request a certificate of account status, which is needed to terminate entities registered with the Texas Secretary of State.
Great, Betsy. All right, next question. What must an entity that is part of a combined report file if it is ending its existence or no longer has nexus in Texas?
Well, Melissa, if your entity is a member of a combined group, Franchise Tax Rule 3.590K, margin combined reporting requires that when each and every entity in the entire group ends its existence or no longer has nexus in Texas, the group must file its annual combined franchise tax report for the previous accounting period, if not already filed, all applicable public or ownership information reports for each member of the combined group that has nexus in Texas, and a final combined franchise tax report. And remember, this final report is due within 60 days of when the group terminates or ceases doing business in Texas. And of course, Form 05-359 for each member needing a certificate of account status to terminate with the Secretary of State. But an important fact to remember, if only some members of the group end their existence or no longer have nexus in Texas, these terminating members only must file Form 05-359 to request a certificate of account status to terminate, and to notify the Comptroller's Office with the name of the reporting entity that will file the terminating member's accounting data.
Thanks, Betsy. All right, I think we have time for one more question. What happens if my business closes in the first year?
To end its existence in its first year, a taxable entity must satisfy franchise tax filing requirements prematurely. If the entity ceases business and has not had an accounting year end, the entity will file an annual franchise tax report, either the no tax due, easy computation, or long form report, along with the appropriate information report, and pay any tax due. And be sure to write the word premature across the top of the reports and include Form 05-359 to request the required certificate needed to file with the Secretary of State. And if the entity is not registered with the Secretary of State, to notify the Comptroller's Office in writing of the last day business was conducted in Texas.
All right, thank you, Betsy, for reviewing all those questions. If you have other questions, please submit them to tax.help@cpa.texas.gov or give us a call at 800-252-1381 to speak with a tax specialist. Y'all have a great day.